Pagaya, one of Sofi's partners, has just debuted on Nasdaq with a whopping $8.5 billion valuation. This was made possible with Pagaya's SPAC merger deal with EJF Acquisition Corporation. Pagaya began trading on June 23rd with a ticker symbol of PGY and is continuously crushing the game in peer-to-peer lending. Pagaya is a known partner of Sofi, boosting their lending segment with their leading technology that underwrites, sets prices, and takes out customer credit risk. In 2021, Pagaya recorded a massive 379% increase in revenues, gathering a total of $474.7 million, which is 17% higher than expected. If you're not too sure what Pagaya is, we've created a video explaining what it does and how it'll benefit Sofi, so be sure to check that out after this video. We've linked it in the description box below. There's been rumors spreading around that shareholders of Pagaya had sold their stake even before it went public, and the real question is, how does this affect Sofi? In this video, we're going to go over the key details for the debut of Pagaya on Nasdaq, how they performed during the last year, and how this news affects Sofi. We're not financial advisors, and this isn't financial advice, so always do your own due diligence. In October 2021, Pagaya teamed up with Sofi to step up its mission to become a household brand. According to payments.com, this will boost Sofi to expand members' access to its financial products through Pagaya's artificial intelligence, technology, and infrastructure. So basically, Pagaya can act like a middleman for those who need Sofi products. It's only been a year since Sofi debuted on Nasdaq, and it's good to see that its partners like Pagaya are following the same footsteps. Pagaya recently closed a deal with a SPAC merger tied up with EJF Acquisition Corp, a blank check company meant to finance a merger or an acquisition. The acquisition was approved by Pagaya shareholders and EJF shareholders on June 16th and 17th, respectively. Pagaya is now trading on the Nasdaq stock market with a ticker symbol of PGY for Class A ordinary shares, while PGYWW is the code for its public warrants. This is what Krubiner, the CEO of Pagaya, said about the latest move. 6 years ago, we embarked on a mission to become the leading network powering financial possibilities for our partners and their customers. We believe being a public company better positions us to continue becoming the trusted AI partner for the banking ecosystem, helping to expand the availability of life-changing financial products to more people. A whopping $8.5 billion valuation was set for this deal, the second largest SPAC merger by an Israeli company. Just to recap, Pagaya was founded 6 years ago, and it provides peer-to-peer credit and loans utilizing its AI technology. Now, here's the catch. According to Globes, which covers Israeli companies, 100% of Israeli tech companies that went through SPAC mergers have resulted in a dive in their valuation. Here's what CEO Krubiner said: "We don't deal with that. Unfortunately, or fortunately, we don't control the share price. It's important to understand that the issue is the long term. What will be the performance in 5 years, for example?" Though this sounds familiar, like a clone of Anthony Noto talking about Sofi's long-term plans, Pagaya expects to be the top choice in the end-to-end AI solutions for banks. But let's talk about their figures. Last year, Pagaya earned $474.7 million in revenue, a massive 379% increase compared to 2020, and it's 17% higher than expected revenue for 2021. On network volume, Pagaya is currently on the line of $4.9 billion, and if you'd want to know, that's a 208% increase compared to 2020. Pagaya's chief financial officer said their top asset that drives this growth is increased network volume with the new and existing partners. So, let's talk about partners. We all know that Pagaya is a partner of Sofi. Pagaya's artificial intelligence, technology, and infrastructure empowers its partners to more robust access to financial products outside the existing traditional credit models. But did you know that Pagaya also collaborated with Ally Financial's credit card business this year? According to Pagaya, it expands access to more of Ally's credit card clients. But anyways, it looks like Pagaya is stepping its game up as it also announced a strategic relationship with Visa. And there's no doubt that Pagaya is on track with its long-term goals. While Pagaya is supposed to celebrate its first few days on Nasdaq, rumor has it that some of its shareholders aren't a little happy with this news and sold their shares before it got offered to the public.
I'm not happy, Bob. Not happy.
Some speculations are grounded on the doubt that the current valuation of Pagaya won't skyrocket just because it's a SPAC and we know SPACs aren't really getting much love nowadays from retail investors. To add fuel to this fire, a week before Pagaya first started trading on Nasdaq, Barclays Bank, the underwriter for the SPAC, backed out, sparking the rumors even more about the disagreement of Pagaya's $8.5 billion valuation. Barclays really said. So how does this affect Pagaya's partners like Sofi? In the third quarter earnings conference, Sofi CEO Anthony Noto drew a line between Sofi and Pagaya's partnership and talked about their game plan years ago. Pagaya and all other partners of Sofi underwrite and make a price to take out the credit risk from members without adding more credit risk on SoFi's end and maintaining their loan approval guidelines. SoFi's just being sure they're securing their future by having more people benefiting from their products and services. The truth is, it may be a little too early to see how this is going to affect SoFi, at least in our opinion. All we know is Pagaya is an asset to SoFi, just like Galileo and Technisys, and to be able to meet their vision of becoming a household brand. Teaming up with the fintech uniform like Pagaya might just be one of the best options. The better Pagaya does as a company, the better it could be for SoFi since it has more opportunities to grow. Though Pagaya is having a rough ride with the rumors spreading around about the shareholders selling, Pagaya and SoFi are just like friends with benefits. Nothing more, nothing less. They get mutual benefits from each other. SoFi serves customers and their lending segment without adding up the burden on their existing credit risks. And Pagaya becomes that AI partner for the banking ecosystem. As SoFi only partnered with Pagaya and doesn't own it like Galileo and Technisys, there's no direct connection between the two. And we see no big deal about this recent news. So for those who are tripping about the Pagaya rumors,
don't trip.
In fact, kudos to Pagaya's management. There's a quote here. If you're not a risk taker, you should get the hell out of business. Shareholders who sold Pagaya and other SoFi shareholders who thought they escaped this catastrophe seem to underestimate what it can do beyond what they see, in our opinion. We personally believe in the potential of Pagaya, but full disclaimer, we haven't invested in this stock. Right now, it just makes sense for us to keep loading the boat on SoFi. In case you still don't know what's ahead of SoFi, here's a word from the GOAT Anthony Noto.
And then we have a technology platform that may not be that well understood. We power a number of the key neobanks as well as B2B enterprises through our Galileo technology, as well as Technisys, which is a core banking technology. So 3 different businesses that all have different growth characteristics. I'd say our member is doing quite well. It's a high mass affluent member. Average income for our loans right now is over $160,000 and really strong credit at 740 plus FICO score. So that diversification is allowing us to gain market share. That's driving the record results. The $322 million of revenue you mentioned was up 49% year over year. And we had our 7th consecutive quarter of positive EBITDA, which is what we think is the best measure of profitability for our business. And we have a great balance sheet. So the diversification of our businesses allow us to overcome a lot of the volatility in the marketplace and drive such consistent results, which is why we also raised our outlook for the year to 1.5 billion plus and 100, that's in revenue, and 100 million in EBITDA.
If you haven't already, make sure to follow us on our social media pages at Wealth Gambit. The link will be in the description box below. A special shout out to everyone in our Patreon community. You guys truly help to make these videos possible, and we really appreciate all the support. Shout out to Arthur Magazu, Wei Chu, Daniel Corbett, Mr. Welfare, Casey Patel, Jeff Sherman, Gregory Villar, Bo Park, Denzel, Reginald Davis, Les Broadway, Christian Cardelphi, Kevin Beaufrand, Jay Bone, Daniel Zinson, and ABC Sam. If you happen to gain any value from this video, smash that like button for the YouTube algorithm and subscribe to help us hit our goal of 5,000 subscribers. Thanks for watching. We greatly appreciate it. And until next time, peace.